All right, folks, tomorrow, September 1st. September 1st marks the effective date for a big automation process from DTCC that I believe will change a lot of things on the market overall, but for a lot of market participants which are involved as short sellers in AMC stock. So this might have a direct and an indirect roles and impact on the short squeeze moving forward. So I'm talking about the UMR automation process. I mentioned this multiple times on my channel, guys. I'm talking about the article we had a couple of weeks ago, a couple of months ago from Bob Stewart, the DTC Executive Director in charge of institutional trade processing. And he mentioned that starting the beginning of September, so September 1st, they're going to automate the process that will look at making sure the failures and the fails and the errors that they've seen since 2020 with the huge market sequences that we've experienced. There was a lot of failures, and they wanted to fix this issue by implementing a new process that will require every firm with more than $50 billion in average aggregate notional amount for OTC derivatives to actually have a minimum exchange threshold of $50 million per counterparty. Okay, people who are doing business with them. But we know, coming from Bob Stewart's words, that the recent reports they have seen, and the data they have in hand indicate that a significant number of market participants subject to this phase 5 are far from being ready to comply with this coming September 1st deadline. Also, we know that phase 5 will start the UMR. This is the automated process for the OTC derivatives. There will be an upsurge in the volume of margin calls and an increase in the need of third-party custodians to safekeep collateral like the NSCC or even the DTCC. As a result, the UMR will likely require many buy-side firms to make significant changes to their existing collateral management processes. So on one hand, these guys seem not to be ready because people who tend to have a lot volume, a lot trading taking place into OTC derivatives are hedge funds. So Citadel, Virtue, Simplex Trading, all of these guys which are heavily shorting AMC stock. So what does that mean for them? It means they will have to have much more requirement in terms of the money, the threshold that they have to put in cash or in collateral in order to make sure they still trade. Otherwise, they will have to face huge margin calls. Huge margin calls for AMC means what? Well, when you look at what we closed today, if we go back to a certain level around the resistance here on the 48, look at where actually we are going back to. We are going back to the 60s. So we are a couple of cents away from the 48. All right. That means comes tomorrow when this thing will start kicking in. Okay. Huge market participants, not only looking at the big fishes like Citadel or Simplex, but looking at the small short sellers who came in around here, all right, when AMC was still a little bit under $30 a share and initiated a short position. For those guys, not only they are actually looking pretty bad, okay, it's getting worse because the uptrend is solid, and with 58% gain since the beginning of the month of August, guys, I don't care who you are, channels or whoever, you are losing a ton of money. So if this, in addition, force you into covering your positions, that means buying pressure coming in. So guys, we don't know exactly how this thing, because I don't think there's been an unprecedented, a similar, situation coming from the DTCC so far, but looks like things are getting a little bit bad or looking a little bit worse than they actually look for the short sellers into the play. With everything else going on around the stock market and this stock specifically, it feels like on the very near term, we might actually end this week closing on something around maybe 50 or 60.